Evening, everybody. Welcome to this meeting of the Scrutiny Finance Review Group. It's 6 o'clock. We might as well make a start. I guess I need to read out my formal script. Please note that it's intended to live stream tonight's meeting. If successful, a recording of the meeting will be available on the Council's website within 24 hours. Members and officers, please remember to switch microphones on and please speak directly into the microphone and switch off again after speaking. Reporting officers using Teams, I don't know whether we have any of that, it looks like we might have. Please switch cameras on when addressing the committee and off again after speaking. Please use the hands up icon to indicate questions and comments. I will then invite you to speak. Any exempt or private items on the agenda, the live stream will cease prior to the meeting moving into private. There might be a short delay whilst we achieve that. Okay, let's get on with it then. Apologies.
Yes, Chair. Apologies from Councillor Ajisola, who's been substituted by Councillor Chowdhury, M. Hussain been substituted by Councillor Dave Taylor, and also apologies from Aslan Khan.
Thank you. We have two sets of minutes. Is everybody happy that I should sign both sets, or anybody got any issues on either of them? No, okay, thank you very much for that. Disclosures of interest, you know the rules as well as I do. If you have disclosable interests, either disclose them now or immediately prior to the item coming up. Section 106, I don't think we have it. No urgent business, no references from other committees, and I don't have any announcements to make. So straight on to Dev, please, finance updates.
Thank you, Chair. So we're working on the Q2, which is from April to September. So that is in the forward plan for the 2nd of December to executive. I think the next FRG is 21st of November, so it will be a bit tight to bring this to the next FRG. But probably in the next FRG, I'll be able to give a much more detailed update. But at this stage, the pressures are quite significant. So even compared to Q1, there's more pressures in areas like adult social care, children's and transport, especially educational need transport and homelessness. So those demand-led services are still experiencing quite significant budget pressures. So we're working on that, and we're working on our deficit recovery plan and transformation, which there'll be an update later. So those will be reported to the next executive and will be formed the basis of the 25-26 budget as well, because as I said, there's quite significant pressures in the budget. So at this stage, that's all, Chair.
Okay, any questions, comments? Yes.
Dad, you just mentioned about the pressures of how much pressure we got so far. Where are we getting pressure from?
I think I will try to bring in much more detail on the 21st of November, but the areas where we've got pressure is adult social care. So adult social care has got significant budget pressures. The other areas like homelessness and transport and children's, they are not as high as in adult social care. So we have had few meetings with the portfolio holder and Mark, and we're looking at those areas, how we can mitigate those pressures. So the plan for the executive meeting and for FRG on 21st of November is to say, okay, how much we can mitigate and how much of these pressures may or may not have impact on the 25-26 budget, which is key because it's a demand-led services, which is, the rest by and large is, except accommodation as well is an area where you will see there's a lot of, so all these are very much housing, health related, and these are the areas which are quite a challenge to control those pressures.
Thank you, Deb. You happy with that? Any more? Okay, Deb, it's down to you again. Update on the council's complaint against Ernst & Young. Has anything significant happened since the last update at the full council?
Nothing significant, Chair. Yeah.
Okay, thank you very much. Are we going on quite well with this, aren't we? Page 18 then, Treasury Management Annual Report. Deb, are you doing this?
Chair. So John will do that.
Okay, John.
Thank you, Chair. Can you hear me? Okay.
Yes, we can. Thank you.
Excellent. Thank you, Chair. Okay, I'm pleased to present to you the annual Treasury outturn report for the financial year 2023-24, which ended 31st of March 2024. This report went to Audit and Governance Committee last week and is going to Executive next week. So Finance Review Group have the opportunity to scrutinise, note the report and consider any tasks for the group arising from the management activity for the year. Three major things to note is that the reduction in borrowing of just over 30 million across the year 2023-24, mainly due to slipped capital projects for a varying number of reasons. For example, the stage project been reprofiled. It's difficult to identify appropriate housing arrangements for the TAPS projects and affordable housing. So there's a number of reasons underpinning slippage across the capital programme, which resulted in us borrowing less money. So that's the main issue. But it's good to note that we did not breach any of our prudential indicators across the financial year. So we stayed within the boundaries that were set within the Treasury Management Strategy set by full council back in February. And that's always an encouraging position to be in. And of course, the report also covers our Treasury Management consultancy advice around economic outlook, interest rates and the like, which is covered in the report. So in short, we give a précis of the original position versus the final position in terms of the capital spending and the impact on our borrowing, our CFR, in terms of how much we need to borrow to prop up the capital programme, both for the general fund and for the housing revenue account. And there's various other indices within the report. It's a standard version that we're accustomed to presenting. So I won't go into too much more detail. There is quite a lot in the report. And I will invite any questions, of course. Thank you, Chair.
Go on then, you got your hand up first.
Can I ask you a question on page number 23? It relates to borrowing rate for 2024 to 25. Is that a fixed rate or they are variable? Are they affecting future? Do we have any risk?
Okay, yeah, the rates are variable. The Public Workers Loans Board, which is our chosen method, we can of course use other options as well on the short-term borrowing basis. But the PWLB rates are linked into interest rates. And of course, we're going to see a gradual downturn of interest rates in the coming time. The report actually refers to that from our Treasury Management advisors. So the risk, of course, is that rates would increase, but that's not forecast in the immediate future. The opportunity, of course, is that if rates are reducing, we will consider taking the borrowing at the time when the rates are on the way down, to minimise the cost. So there's always risks in this, but we're saying we didn't need any new money last financial year because of the slippage in the capital programme. But of course, from time to time, we will have to revisit that, and dependent on the direction of travel for the year that we're in. We're expecting to take some borrowing later this year, but not at Q2. So yes, there's always inherent risks with interest rates in the market. And we consider those risks and try to mitigate against any higher costs in times of rising rates.
Okay, any more? Yes, David.
Yes, thank you for the report, John. Just a couple of things, if I may. I know your report says that we haven't had any new funding from the Public Works Loan Board. Where do I see which projects have been delayed so that I can see clearly what they are. And
Okay.
we also at a previous meeting I was at, we saw that there was money going to be invested, I think 20 million, if I remember right, in buying a new property. So that's a new capital thing that came up not very long ago. So really what I think I'm asking is, I can see in the report what the numbers are, and it looks like there's some quite encouraging things in there, because we haven't had as much of a hit as we might have done. But it's by delaying capital projects. Which capital projects and what long-term effect have those delays had on us?
Okay, the report doesn't go into that level of detail, Councillor, but of course we could have that by virtue of consulting the Green Book. So we'll be working on a refresh of the Green Book soon. But the Green Book that we published for 24-25 would actually indicate where there's been slippage. And it is some of the big ticket items, like I say, the stage project, which was originally planned to have quite a lot of expenditure in this in last financial year, and for various reasons there's delays. So whilst the report doesn't actually go into major detail on that, there are mechanisms for identifying and reporting on the extent of the slippage by virtue of consulting the Green Book. So we could do something around perhaps some of the bigger ticket items to give an indication of where the changes have occurred, and indeed perhaps an appraisal of the impact that might be having on services and on business generally. That could be John, a follow-up.
The reason, John, why I was asking the question is that we have a Green Book which is now significantly out of date, and I don't know, frankly, where I would look in order to be able to get the answer to that question I've just posed to you. I think if I've understood what you said, we could have at least a top level statement of which projects have been delayed whilst we're waiting for an update of the Green Book. Is that correct?
Indeed, Councillor, and that's actually whilst you were speaking, it occurs to me that we did of course have the outturn report that was seen by executive, I think in June, and that outturn report would give more information about obviously revenue and capital, which this is principally to do with. So the outturn report that precede the position for 23-24 would be the first place to look, actually. So sorry, I mentioned the Green Book, didn't I? But I think actually outturn report would be the obvious place to start with. But I'd be happy to pull out some of the big items and provide a note. I think that might be helpful for councillors to understand where we are with things, and perhaps some reasons for the slippage and the risks associated with that slippage. That might be a point to take away.
Just complete that discussion, if I may. Yeah, thank you, John. I'll go back and look at the outturn report. It didn't shine out to me that it was giving me the answers of which major projects had slipped and the consequence of those slips. I may have perhaps not read the outturn report well enough. I shall go back and have another look. Thank you.
Okay. Thank you, Councillor.
Yeah, I'll intervene here because one of the questions I was going to ask was, to what extent has the temporary accommodation procurement programme slipped in the capital programme? And are there any obvious explanations for that? But in the light of the question that you've just been talking about, John, could I suggest you just drop an email to members of Finance Review Group setting out the major items? You don't need every last, but the major items where there've been major slippage. And if there is a brief explanation of that, that would be helpful too. Would that be possible, John?
Yes, Chair, I think that's a very good idea, actually, because if it isn't as transparent as I'm suggesting in the outturn report, it needs to be. And we can certainly have a look at the big items, as you suggest, and provide some risks. We've got all the facts and figures, and the finance business partners can help me pull that together, and I'll sign it off with Dev. Be happy to do that.
Thank you very much indeed, John. Anybody else on this subject? No, I think we are merely asked to note the report. Everybody comfortable with that? Okay, I think we move on then to the work programme. This is your opportunity to add or delete as you see fit. Anybody have any comments on the work programme, please? It's a fairly full programme, and we are, of course, moving very close now to the stage where we're going to be looking at budget proposals, and that's going to take a fair amount of our time, I'm sure. It's going to be a very difficult budget. I'm sure we're all expecting that. Work programme acceptable? Okay, I think I now have to move. We move into private.